Hello, powerful traders. Welcome to Prime Risk. In this video, we're going to learn how we can make over $200 a day in profit from this market using a very simple but high win rate trading pattern. In this video, we're going to dive into how to recognize this pattern, the main filters to identify it, and the enhanced strategies to help us achieve consistent profits. So stick with us until the end. This pattern goes by several names, but it's most commonly known as the 3 consecutive candlesticks pattern. To find this pattern, we use a candlestick chart. The first candlestick is called the power candle, which forms with a strong body and a full-bodied shape, indicating the start of a strong trend. The second candlestick is called the pullback candle, which is the opposite color of the power candle and has a smaller body. This candlestick shows a pause in the trend, which could be due to various reasons like traders taking profits, especially those who entered earlier. The third candlestick is known as the confirmation candle or entry candle, which has a relatively strong body and is the same color as the power candle. Let's look at an example together. First, we see a big green candle, which is the power candle, signaling a strong uptrend. Then, a small red candle forms, acting as the pullback candle. Finally, another green candle forms, closing higher than the pullback candle. This 3-candle bullish pattern signals an entry point for a buy trade after the confirmation candle closes. Here's another example. A large red power candle forms, indicating the start of a strong downtrend. Then we get a smaller green pullback candle. Finally, a red confirmation candle closes below the pullback candle, indicating that the downtrend will continue. After the confirmation candle closes, we enter a sell position. At first glance, this pattern might seem very simple, but after backtesting, you'll realize how impressive its win rate is. It's a highly recurring pattern, and you can find it easily on any symbol and time frame. But just because you see this pattern doesn't mean you should always jump into a trade. Absolutely not. Every pattern requires filters to get the best results. If you enter the market every time you see this pattern, the outcome won't be as good. So we need to understand the proper filters for it. Let's go over some of the most important filters for this pattern. Filter number 1. Some traders, as soon as they see 3 candlesticks in a row with a candlestick of the opposite color in the middle, think it's the right pattern. But one of the first things to look for is the power candle or starting candle. The first candle should have a strong body due to high volume and liquidity, and it should be a full body candle. This candle shouldn't have long shadows, as that would go against the definition of a power candle. Filter number 2. When the pattern is forming, there shouldn't be any significant support or resistance levels in the way of the pattern, because when the price reaches these levels, it may react and change direction. Since this pattern works in the direction of the trend, we need to pay special attention to these levels. Filter number 3, the third candle or confirmation candle, must close above the pullback candle in an uptrend. This close indicates strong buying pressure. Similarly, in a downtrend, the confirmation candle must close below the pullback candle in order for us to enter the trade. Now that you're familiar with the right filters for this pattern, it's time to learn a few advanced strategies so you can fine-tune your trading and consistently make $200 a day. If you've enjoyed the video so far, I'd appreciate it if you could give us a quick like. It won't take much time, but it'll mean a lot to me. Enhanced Strategy 1. Combining the 3-candle pattern with trend direction. As mentioned earlier in the video, this pattern works in the direction of the trend. So we should only trade in the direction of the trend. One of the best tools for determining the trend is the EMA indicator, which effectively shows whether the price is trending up or down. Once selected, adjust the period to 50. If you prefer swing trading, you can change it to 100, but for scalping, EMA 50 is usually the most effective. When the price is above the EMA, we look for bullish three-candle patterns, and when the price is below the EMA, we look for bearish three-candle patterns. For example, here we see the price above the EMA and the pattern forms. After the confirmation candle closes, we can enter a buy trade and place our stop loss below the pullback candle. For the profit target, we can aim for 2 times the stop loss distance. Enhanced Strategy 2. Combining the three-candle pattern with breakout levels. This is one of my favorite strategies as it has given me an amazing win rate. When the price breaks through a key support or resistance level, this is when the pattern forms. The appearance of this pattern during this time signifies the continuation of the strength of that breakout level. For example, when the price is stuck in a trading range and then breaks out, forming this three-candle pattern, we can enter after the confirmation candle closes, setting our profit target to twice the stop-loss level. This can also apply to other patterns like triangles or flags. When these break out and the three-candle pattern forms afterward, we can enter a trade. Always remember, no strategy in the world has a 100% win rate. This is why we use stop losses in our trades. But because this pattern offers us a great risk-to-reward ratio, after mastering it and backtesting, reaching $200 daily becomes quite achievable. Thanks for being with us at Prime Risk.